Hey, around here the conversation is always about wealth, but I think there's something important getting overlooked right now because the noise in the markets is so loud. Prices are moving fast, emotions are running high, and a lot of people are stuck asking themselves whether they should stay in or step out. When I zoom out, though, I don't see a broken market. What I see is a widening behavior gap. The real difference right now isn't information, intelligence, or access, it's acceptance. Institutions have already accepted that the world is changing in a fundamental way. They're operating with assumptions built around faster settlement, digital infrastructure, assets moving more freely, and money behaving differently than it did in the past. They're not sitting around debating whether this future might happen someday. For them, it's already here. Retail investors, on the other hand, are still caught in the phase of deciding whether they even believe that future is real. And that hesitation shows up clearly when volatility hits. You can see how quickly conviction fades the moment price starts moving against expectations. Discomfort sets in, and when people are uncomfortable, that's usually when positioning begins to separate. There's a quiet split happening right now between those who have already aligned themselves with where the world is going and those who are still reacting to what happened this week or this candle. If you don't consciously recognize which side you're on, the market will eventually force that decision for you. What's interesting is that this divide isn't loud or obvious. It's not about who's smarter or who has better data. It's about belief. Institutions aren't asking whether digital systems will exist in 10 years or whether financial rails will become more efficient. They've already priced that reality into how they operate. Retail hasn't, and that's where the tension shows up. When price moves sharply and emotions spike, some people immediately question their entire thesis, while others get quieter. They step back, revisit their framework, and reassess without panic. Not because they know something secret, but because they've already committed mentally to a future they trust is coming. That distinction matters more than most people realize. The market doesn't expose this gap when everything is calm and moving upward. When prices are rising, conviction feels effortless and everyone feels aligned. The real separation only becomes visible when things get uncomfortable. That's when you see who is actually investing based on a longer term view of where the world is headed and who was really just riding momentum, hoping it would continue. This moment is uncomfortable precisely because it forces honesty. It's easier to stare at charts or react to headlines than it is to sit with the deeper question of whether you truly believe in the future you claim to be investing in. Uncertainty has a way of stripping away surface level confidence and revealing what people actually believe when price no longer agrees with them. Once that divide becomes clear, a lot of the confusion around why people are making completely different decisions at the same time starts to fade. And this is where things get more personal because this is the part most people quietly avoid. At some point, everyone in this space has to answer a very simple question for themselves, not publicly, not in comments, not on social media, but privately and honestly. Do you actually believe the world you're investing in is going to exist? That question sounds basic, but it carries weight because if the answer is no, that's not a failure. It just means your behavior should match that reality. If you genuinely believe blockchain, digital infrastructure, faster settlement, and tokenized assets won't really matter 10 years from now, then staying in volatile markets doesn't make much sense. There are plenty of other places to deploy capital that don't require sitting with this level of uncertainty. Where people get stuck is when they say they believe in the future, but their actions don't reflect that belief. You can see it when someone rushes in as price is running and then immediately starts questioning everything the moment price pulls back. That's not a market problem. That's an unresolved belief problem. Because if you truly believe something has a role in the future, short term volatility doesn't feel like a verdict. It feels like part of the process. It feels like friction along the way, not proof that you were wrong. That doesn't mean you ignore risk or hold blindly. It means your decisions aren't being rewritten every time a chart moves against you. A lot of people are realizing right now that they never fully answered that belief question. They were interested, they liked the upside, they were optimistic, but they never sat with whether they believed enough to stay aligned when things got uncomfortable. This moment forces that clarity because uncertainty has a way of pulling truth out of people whether they want it or not. Once that belief is settled one way or the other, everything becomes simpler. Not easier, but clearer. You're either positioned with intention or you move on without constantly second guessing yourself. The real trouble comes from trying to live in the middle, where belief and doubt coexist, and every price move feels personal. That's where stress compounds and decisions start to break down. This is where two very different paths begin to appear, and a lot of frustration comes from people mixing them without realizing it. There are really two approaches in this space, and neither one is wrong, but they demand completely different tools and emotional discipline. One path is trading. Trading is about execution in the present, not belief in the future. It means paying attention to leverage, liquidity, open interest, funding rates, volatility, entries, exits, and risk management. It's technical, structured, and rule based, and even then, traders don't lose money because indicators stop working. They lose money because emotions override their rules when things get uncomfortable. The other path is positioning. Positioning isn't about catching every move. It's about aligning yourself with where you believe the world is going and building exposure around that over time. It's about infrastructure relevance, adoption, survivability, and whether an asset still makes sense in the future you believe is coming. The problem starts when people say they're doing one thing but emotionally behave like they're doing the other. They claim to be long term, but react to every dip like a trader who missed an exit. Or they say they're trading, but hold losses because they're emotionally attached to the asset. That mismatch is where frustration lives. The tools don't match the behavior. If you're positioning, volatility isn't a panic signal, it's something you expect and plan for. If you're trading, volatility is part of the job, but only if you're managing risk instead of hoping. Neither approach works if emotion is driving the decision making. That's why moments like this feel so intense. They force people to confront which path they're actually on, not which one they like to say they're on. Once that becomes clear, decisions start to make more sense. Again, not easier, but clearer. And clarity matters because it reduces noise, it reduces impulsive reactions, it gives you a framework to return to when price stops cooperating. Most stress in markets doesn't come from volatility itself. It comes from internal inconsistency, from trying to trade with a long term mindset or invest long term with short term emotional reactions. When those are aligned, pressure decreases. When they aren't, every market move feels heavier than it should. This is why structure matters so much. Once you understand which path you're on, the next question is how you're actually set up. Not just what you own, but where it sits and how exposed you are to the noise around it. For me, staying clear headed during volatile periods comes down to structure and custody. I use I Trust Capital because it allows me to think longer term without everything living on an exchange. When volatility spikes, the last thing I want layered on top of price movement is platform risk, freezes, or security concerns. One way I use it is through a Roth IRA. If the future I believe in plays out over years, I don't want taxes quietly eroding that growth. With iTrust Capital, you can hold crypto inside a Roth IRA, trade within the account, and if it grows over time, that growth can be tax free. The other way I use iTrust Capital is through a premium custody account, which matters even more in chaotic markets. Assets are held off exchanges in a closed loop custody system. That means funds can't just be sent out to random wallets, reducing the risk of hacks, phishing, or unauthorized access when things get noisy. You still have flexibility. You can trade around the clock, hold stablecoins like USDC, stake assets like Ethereum and Solana, and even hold physical gold and silver in the same place. I like having that structure because it keeps me focused on decisions, not stress. I'm not trying to react to every move, I'm trying to position correctly. There are no monthly fees, pricing is transparent, and there's a funding bonus available when you open and fund an account. I'll leave the details below for anyone who wants to explore it further. Structure isn't about maximizing returns in the short term, it's about protecting clarity when markets test your patience. Everything ties back to emotion, because whether someone is trading or positioning, long term, unmanaged emotion will quietly break both paths. You can know every indicator and still lose money if fear or ego overrides your plan. You can believe deeply in the future of an asset and still sabotage yourself if you never resolved what volatility was going to feel like along the way. That's why moments like this matter so much. They expose how you respond when things don't go according to plan. Conviction doesn't mean never feeling uncomfortable. Conviction means you've already thought through what discomfort looks like before it shows up. If you're realizing right now that you're more reactive than you expected, that's not failure, that's information. And information can be used. What usually causes damage is pretending you're calm when you're not, or pretending you're long term while reacting short term. Once you're honest about where you are, the path forward becomes clearer. You either commit to learning the tools required for the approach you're taking, or you reduce exposure until your understanding catches up. What doesn't work is staying stuck in the middle, half belief, half fear, constantly switching direction based on price. That's where people burn out. That's where they sell at the worst time or walk away, convinced they were wrong when they were really just unprepared. This moment isn't asking you to predict the future. It's asking you to understand yourself better as an investor. That's also why I built my coaching community the way I did. Um, Understanding markets intellectually is one thing. Staying grounded when price is moving like this is something else entirely. Inside the community, we're not guessing tops and bottoms. We're working through real portfolios, real positioning, and real decisions. We talk about risk, time horizons, and what people are actually trying to build with their lives, not just their money. I'm live every week with members, answering questions and walking through markets in real time. There's accountability, support, and structure. And because health is part of wealth, we focus on sustainability too. If you're overwhelmed, exhausted, or emotionally drained, your decisions will suffer whether you realize it in the moment or not. Most people underestimate how much their nervous system influences their investing behavior. When you're constantly tired, overstimulated, or emotionally reactive, even small market moves can feel much bigger than they actually are. You start second guessing plans that made sense just days earlier. You hesitate when you should act and rush when you should wait. Over time, that kind of mental strain doesn't just hurt performance, it erodes confidence. You begin to doubt yourself, not because your thinking is wrong, but because you're trying to make decisions from a depleted state. That's why clarity isn't just a mindset, it's a condition. It comes from having enough space, structure, and support to think without panic creeping in every time price moves. That's also why I keep what I do very intentional and selective. This isn't about chasing growth at all costs or creating a high pressure environment where people feel like they're constantly behind. It's about building something sustainable where decisions are made with awareness instead of urgency. Availability may change because the goal isn't to work with everyone. It's to work with people who are actually ready to slow things down, ask better questions, and build confidence from the inside out. When you remove constant noise and comparison, you start to notice how much clearer your thinking becomes. You stop reacting to every headline. You stop feeling like every market move is a personal test. Instead, you begin to develop a process that you can live with, one that supports both your financial goals and your well being. If you're looking for a place to slow the noise, think clearly, and move forward with confidence, the details are below. This is for people who are tired of feeling scattered, tired of reacting, and tired of trying to navigate complex markets alone. It's for those who understand that consistency matters more than intensity, and that long term wealth is built through alignment, not constant stress. You don't need to know everything, but you do need an environment that supports growth, learning, and honest reflection. When those pieces are in place, progress stops feeling forced and starts feeling steady. At the end of the day, this is about more than markets. It's about how you show up in moments of uncertainty and how you care for your capacity to make good decisions over time. When you protect your clarity, everything else becomes easier to manage. Stay wise, stay wealthy, and I'll see you next time.